Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson Ag. Well, we're seeing a lot of green on the board in both the grain and livestock futures trade this morning. Randy, we have not seen that for the last few sessions. Feels more risk on. Where's that coming from? I know we do have the dollar down sharply today.
We do. And I think, we've taken a lot out of this market this week. I mean, it's been a brutal week in all three of the commodities and, seeing some pretty big losses. So I think we're seeing a little bit of technical action come into play. I think we're still seeing some positioning ahead of the reports. USDA is going to come with their July crop production report tomorrow at 11 o'clock. And I think that is bringing in some last minute positioning too. But, the fact that, we're starting to see weather kind of still have, it's a weather forecast we need to see in the short term, but if it lingers, I think there's a little bit of concerns. And with no weather premium in this market, I think the trade is trying to bring a little bit of that back in again.
Yeah, the funds have really hammered both corn and soybeans here this week on weather. As you say, we don't have any threatening weather, and so the market is at programming in ideas of maybe trend line yield or not, or above.
I think they're looking at above right now. Yeah, you look at the weather forecast, the 1 to 5 is calling for above normal temps and below normal precip, which is in the Western Corn Belt and the Northern Plains is exactly what they need. They picked up some good rains in the Eastern Belt, so the heat's not going to really bother that. The 6 to 10 is showing, cooler, wetter conditions, and then the 11 to 15 day switches back to hot and dry. But overall, that's not threatening as long as they get some moisture in between there. And we'll see if that follows through when the 6 to 10 starts coming closer. But at this point, yeah, we're going into pollination stage. We're looking at no threatening weather. The algorithms are saying that it's going to, yield potential is increasing, and that's why the funds keep piling on.
Yeah, and they're probably record short in the corn market now, don't you think?
Oh, I bet they're close if they haven't been. I mean, they were close last week to hitting the record level and not far off. And I think there are 25,000 contracts, something like that, light and the record for soybeans. And I bet they're pretty close to those levels now.
But as we pointed out, or you mentioned, down into 3-year lows here, and of course, chart areas. Let's talk about where we're holding. December kind of bounced off of the $4 mark on the corn. What about soybeans and wheat?
Soybeans bounced off that 1065 level, which, like you said, it's 3.5 year lows. So, I mean, that's kind of strong, some sort line. And, I watched the Minneapolis market, being up here in the Northern Plains and, $6 is kind of where we've been able to bounce off that. And so corn at $4 and wheat at $6 is kind of psychological. And hopefully we can stay above those levels. At this point, with as bad as the market's gotten and the futures have, seen the sell off, a lot more is being dependent on the cash side. And we're seeing basis levels tighten up. So the market, it's kind of telling us that they've overdone selling off the futures because now the cash market has to kind of encourage product to be moved.
So are farmers selling here or not? Are they keeping the bin doors shut?
I think they broke the welders out and everything is locked up right now. So I'm not seeing much selling taking place. The only thing that's happening is there's some deliveries for some earlier sales, but for the most part, no new sales are taking place and basis levels have started to tighten up and become very attractive in a lot of areas right now.
No doubt. Okay, we did have exports since we're talking about demand. We had exports out this morning, maybe not as good as we would have hoped.
Yeah, they were disappointing. I mean, I would have expected to see a little bit better. It was the 4th of July holiday, so maybe we can throw in the fact that we were down maybe 1-2 days because of that slowed down the sales. But they were disappointing in the big picture by looking at it. But we are also looking at almost being at pace for USDA's expectations for corn and for soybeans. So in the report tomorrow, it kind of leads you to think that it might be tough for USDA to lower old crop corn exports and old crop soybean exports because of that.
And speaking of exports, China came in, bought a couple of cargoes of finally some new crop soybeans from the U.S. I think that was our first sale. Are they going to buy more?
I think they will. I mean, right now they're looking at a very good price point to be buying at. They need to fill the reserves. They're going to bring in U.S. beans into the reserves because of the quality is so much better. So I do expect that they're going to continue to be into the market buying just so that they can fill up their reserves.
And what you said about going into reserves, they want quality beans for that. And so although we are, a secondary supplier right now, we still have better quality.
Exactly. We have the quality beans, and that's what they like to buy to go into the reserves. So they're going to be buying U.S. beans to put into their storage. They're going to buy Brazilian and Argentina beans to go into their crush.
Okay. You mentioned a big report tomorrow, obviously. We'll talk about that in a minute. I want to talk about the CONAB numbers that came out this morning as well prior to that. And we didn't see much of a change in soybeans, but there was a little bit of a change in corn, right?
There was. They did hike the corn yield a little bit. They're finding a little bit better than expected yields going across some of the big regions. So they did increase their corn yields a little bit. So that is going to bring a little bit more, competition to the U.S., seeing bigger than expected production.
And report tomorrow. Let's talk about how USDA reconciles, first of all, the big quarterly stocks and the bigger acreage for corn. That's going to be kind of the focus where we think most of the fireworks will be.
It will be. I mean, we know that we had bigger stocks in the quarterly grain stocks reported, for June 1. So we know USDA is going to come in and adjust old crop demand. Now, that's where it's going to be tough for them to come in and lower the exports for corn and beans since we're so close to the pace that USDA is already projecting. For wheat, I would expect that we could see exports dropped a little bit. I think feed demand could see an adjustment for corn, and we could maybe see crush demand lowered a little bit on the soybean side, even though we have been seeing record crush levels on almost a monthly basis.
When you put the new acreage figures in, Randy, talk about what you're expecting in terms of production for corn, beans, and wheat, especially with that 1.4 million acre increase in corn.
That's going to be the daunting number. You look at the 1.4 more from the March estimate for corn at 180 million bushels. That's almost adding 225 million bushels to the production side. And if we don't see an increase in the demand, we're going to see a decrease in demand for corn. So we could be possibly looking at corn stocks increasing close to 300 million bushels in this report. And that's really what's kind of bearish on the corn side. For wheat, we're not going to see a big increase in acres, actually a lower acreage, but yield could increase a little bit, and that will kind of offset it. And for soybeans, the acres came in pretty close to each other, so it's going to really depend on what they do on the old crop demand that kind of sets the tone, I think, for soybeans.
Okay, so the 400,000 acre drop that we saw on soybean acreage, it really doesn't move the meter a lot.
Not a lot. You look at it at 50 bushels an acre, you're looking at such a small number. And we are seeing, stocks are going to see a little bit of an increase. So we might see a 5 million bushel change, which I don't think will show up that much or will be that big of an influence for soybeans.
Yeah. What are you thinking about the Black Sea region? Will we see some big cuts there, Russia, Ukraine, otherwise?
I don't know if we'll see a big cut. I'm just hoping we don't see an increase, because as of late, ICAR and Econ have showed a little bit of an increase for production for wheat for Russia. I hope we don't see that in the USDA numbers, but that I think that's the bigger wild card.
Okay. Let's also talk about the cattle market. We're back up there this morning after being down pretty hard the last 3 days. I think a lot of people are thinking that we've topped that market because we've had lower cash now and cutout values. Are you in that camp?
I'm in that camp. I mean, seasonally, you see the cattle markets peak, late summer, early fall, depending on everything. Right now, I think we could be looking at this market. The volatility is kind of telling us that we've got a short-term top in place. And so I wouldn't be surprised to see this market start to drift a little bit lower. We're seeing a little bit more of a pushback on the demand side, with the box beef prices and the cash market slipping a little bit this week. And we haven't quite heard officially where the demand was for the 4th of July holiday. I think it was a little disappointing, and that I think will kind of throw the scales to the lower side.
Yeah. Interesting though, as well, looking at outside markets, we mentioned the lower dollar. That's tied to the CPI data this morning.
It is, that came in somewhat favorable. We're seeing the dollar drop hard. Stock market's doing well. So, I mean, that's one thing that's going to kind of maybe stabilize the cattle markets. But in the big picture, I think we're seeing some technical selling that's going to hit the cattle markets. And by the time we see, I think by late summer, we're going to see a different look as far as cattle are concerned.
Gotcha. Thanks, Randy. Randy Martinson with Martinson Ag. That is Markets Now.